Hello students, welcome to BYJU'S IAS. Welcome to a session on economy this week, wherein we'll be taking up some of the very important articles that have appeared in various business related newspapers, and we'll be analyzing these particular articles. For this particular video, I've taken the time period from 8th of July to 14th of July 2019, and the articles that I've chosen are from Business Time, Hindu, Business Standard, Indian Express, Live Mint. Let's begin this particular discussion. The first article is related to the concept of a savings and investment. Now, this particular article basically discusses what is the importance of tapping into the domestic savings as well as the foreign savings. Now, what is the importance of the savings? Any of the economy will have three stakeholders. These are one, corporate sector, or in simple terms, we'll call this as firms, the households, and the government. These particular stakeholders in the domestic market will make certain savings, and these particular savings will be invested in the market. And this particular investment as a percentage of GDP, we basically call this as gross capital formation. But more importantly, apart from domestic savings being rooted into the market like this, there is also a component of foreign savings. In simple terms, the foreign investment. So domestic savings will be rooted, foreign savings will be rooted. The sum total is called as gross investment done in the Indian market. Now, what is the issue here? Issue is the CSE states that if Government of India taps too much into the domestic savings, it will affect the consumption. Now, what is the basic relation between the savings and consumption is this. Let's assume hypothetically there is a person X who has earned an income of 100 rupees. Out of this 100 rupees, let's say hypothetically he will use 30 rupees to consume certain goods and services in the market. This is basically nothing but consumption expenditure. And the remaining 70 rupees, let's say hypothetically he will put it in a bank in the form of a savings account or fixed deposit. This particular 70 rupees will be rooted into the market in the form of, let's say, loans, which will lead to investment in the market. So look at this. This particular person X has earned 100 and has used 30 rupees out of this 100 rupees for the immediate consumption. Now, the argument which has been put forward by CA is, if Government of India demands more of this money, that is, demands more of the savings, then it will hit or it will lead to reduction in the consumption expenditure, or in simple terms, it will reduce the expenditure. What is the impact of this? Impact is, this 70 rupees is issued to, let's say, a company. This particular company uses the 70 rupees and produces goods or services, and these goods or services are supplied to the market. Now, the impact will be, if this particular person X has given more than 70 rupees in the form of savings in the market, the money that is left with X to purchase the goods and services will come down. And when the expenditure will come down, it means the demand for goods and services will also come down. So look at this. If Government of India taps too much into the domestic savings, it will have a negative impact on the consumption or the demand for goods and services in the market. That is one issue. What is the other issue? Government can tap into foreign savings. Let's say it will promote investments by borrowing from the international market. In simple terms, Government of India will go to an international agency such as World Bank, or as it has proposed, will go to foreign financial market, issue Indian sovereign bonds and bring in dollars into Indian market. But more importantly, understand this, the CA states, when Government of India will opt for this particular methodology to bring in dollars into Indian economy, the vulnerability of Indian economy will increase. Now, what do you mean by vulnerability of Indian economy? It basically means when the dollars will come into India, it will have an impact on the exchange rate. and when the dollars will have to be repaid, and if Indian rupee has depreciated, then the repayment liability on the government of India will increase. A simple example would be, let's say government of India borrowed $1 from, let's say, World Bank, and the exchange rate was 50 rupees at this point of a time, which means once government of India borrows $1, it goes to the market, gets it exchanged and gets 50 rupees. But what if when the same dollar has to be repaid by the government of India, exchange rate is $1 is equal to 60 rupees. Now don't you think to repay the same amount of a dollar, government of India has to shell out more amount of rupees? In simple terms, the vulnerability of Indian economy will increase with increase by the government in tapping these particular foreign savings. So what has to be done? The CES states that government of India has to maintain a sweet spot wherein a balance has to be maintained in order to ensure that these investments which are sought by the government will not negatively affect the consumption in the domestic market, nor it will increase the vulnerability of the Indian economy to the external market. This is what has been recommended by the CEA in this particular article. Now, based on this, let's have a look at questions. Question number 1, consider the following statements. India's sovereign external debt is approximately 5% of GDP. Now, what is the meaning of this? Government of India borrows in order to incur the expenditure. Now, this particular borrowing can be done from the domestic market as well as from the foreign market or foreign sources. In case of Government of India, it has issued huge number of G securities which are issued in the form of rupee. In simple terms, if I purchase a G security, I will have to pay rupees to purchase this particular G security. And the amount or the interest rate that the Government of India will pay to me is also in the form of rupees itself. So basically, Government of India has issued huge amount of G securities which are rupee denominated debt securities. So this particular borrowing is basically called as domestic debt or domestic borrowings. Apart from this, Government of India has also borrowed from some of the international agencies such as World Bank. And this particular borrowing is in dollar terms or foreign currency terms. This is called as external debt. So out of the total debt that has been incurred by Government of India, around 5% of the debt is in the form of external debt. So the first statement is correct. This particular debt is because Indian government has borrowed by issuing bonds in the external financial market. This is wrong. Government of India has not issued any kind of Indian sovereign bonds in the foreign market as of now. Very recently, this has been proposed in the recently concluded budget, but the fact of the matter is, Government of India so far has not issued it. Now, if these are issued in the coming days, it will be for the first time that the Government of India is actually issuing sovereign bonds or Indian sovereign bonds in the international markets. So, second statement is wrong. Right option for this particular question will be option A, only first statement is true. Next question. Despite being a high saving economy, capital formation may not result in significant increase in output due to. Now basically understand this, in concept of a planning, you will come across one of the very important models which is referred to as Harrod-Domer model. In case of India's planning, we have actually implemented this particular concept of a Harrod-Domer model. Now, Harrod-Domer model basically discusses the relationship between the growth, savings and capital output ratio, which is basically represented in the form of a G is equal to S upon R, where G refers to growth or G stands for growth, S stands for savings and R stands for capital output ratio. Now, the logic of this particular Harrod-Domer model is this. If an economy wants to achieve a higher growth rate, then its savings should increase and R, that is capital output ratio, must decrease. I'll repeat the statement. If an economy wants to achieve a higher growth rate, that is higher GDP growth rate, its savings must increase and its COR, capital output ratio, must decrease. Now there is a very close linkage between savings and the growth rate. We have already discussed this. Higher the savings, what we expect? Higher the investment, and higher the investment, higher the capital formation, and higher the capital formation, the expectation is higher will be the growth rate. This is one understanding. Now what is the concept of a capital output ratio, or else it is also referred to as COR, capital output ratio? It basically refers to the capital that has to be invested to get 1 unit of output. I'll repeat the statement. Capital output ratio basically refers to how much capital must be invested to get 1 unit of output. Now can I simply say, if capital output ratio earlier was 6 and if it has reduced to 5, now can I simply say my capital investment is becoming efficient? Have you understand the statement here? If the capital output ratio was earlier 6, now it has fallen down to 5, it basically means my capital investment is becoming efficient. It means earlier I used to invest a capital of 6 to get 1 unit of output. Now I am investing a capital of only 5 to get 1 unit of output. Now basically this means what? If capital output ratio falls down and savings increases, growth automatically increases. This is a concept of a Harrod-Domer model which we have used in the concept of a planning. But to be more precise, in case of India's planning, rather than using only R, that is capital output ratio, in case of India's planning, we have used the concept of ICAR, incremental capital output ratio. This is what you will come across many of the times in the newspapers as well as the concept of a planning with reference to India. But more importantly, look at the question here. Despite being a high saving economy, capital formation may not result in significant increase in the output due to. The question basically says savings has increased, but the growth rate has not increased. What is the reason? The reason is whatever is the increase in the savings, or yes, there is an increase in the savings rate, but my capital output ratio also has increased. A basic CSET concept is if numerator increases as well as the denominator increases, the outcome will get affected. So this is what is being asked in this particular question. So the right option will be option D, high capital output ratio. Now these are the two MCQs. Let's have a look at the descriptive question. There is a need for the government to hit a sweet spot in order to ensure that its borrowings do not adversely affect the Indian economy. Elaborate, 250 words. Now let's have a look at the next article. It is related to the subsidy in the railways. Now please understand, railways has two very important segments. One is a passenger segment and the second one is freight. That is in simple term, transportation of goods. Government, that is Ministry of Railways, generates huge amount of revenues through the freight segment and in recent times has been suffering certain losses in the passenger segment. But in case of the railways, please understand, it follows a concept of subsidy. That is, it provides a subsidy for the passengers, but the concept of subsidy that is used is, to be more precise, the concept of cross subsidy. Now what do you mean by cross subsidy? It basically refers to a situation wherein extra revenues are generated from one source and this particular extra revenue used to give subsidy in the other source. I'll repeat the statement. From one source, you are generating extra revenues and this extra money, you are using it to provide subsidy in another source. I'll give an example. In case of railways, I stated there are two segments, passenger and freight. Now let's say hypothetically, to carry 1 kg of weight, let it be either passenger or freight, to carry 1 kg of weight for 1 kilometer, let's say hypothetically, railways will incur a cost of 4 rupees. Again, these are hypothetical numbers. What I'm saying is, to carry 1 kg of weight for 1 kilometer, railways is incurring a cost of 4 rupees. Now, in case of a freight, railways will charge a tariff of more than 4 rupees. And in case of passenger, the tariff will be lesser than 4 rupees. And whatever extra revenue is generated here will be used to provide subsidies here. This particular concept is called as cross subsidization. And the same methodology of cross subsidization is also used in case of the electricity sector in India. So look at this. In case of the railways, there are two segments, and the Ministry of Railways cross subsidizes to provide the passenger rates or passenger tariffs at a very heavily subsidized prices. It is said that in case of the railways, it recovers only 57% of the expenditure incurred for passenger transportation. So in simple terms, more than 40% of the ticket prices are subsidized to these particular passengers. Now, very recently in the economic survey, they have discussed the concept of a nudge policy. N-U-D-G-E, nudge policy. And the Ministry of Railways has recently announced that they are going to inculcate this particular nudge policy in promoting the passengers or in asking the passengers to forego this particular subsidy amount. In simple terms, the Ministry of Railways henceforth will give the option of choosing whether the passenger tariffs will be subsidized or not subsidized. For example, if I am traveling by the train, I will have the option to choose whether the tariffs should be including the subsidy or excluding the subsidy. This particular nudge policy is being introduced by the Ministry of Railways in the passenger segment. Now, last year or a year ago, the same kind of a concept was introduced in terms of providing subsidy or providing discount in railway tariffs given to senior citizens. That is, whenever senior citizens' tickets were booked, they had this particular option of choosing non-subsidized tariffs rather than choosing a lower tariff or discounted tariff. Now, what is the objective? Government of India says whatever savings will be done in the form of reduced subsidy outflow, this can be used to develop better infrastructure in railways. So this is the objective with which Government of India is promoting this particular concept of a nudge policy in the railway sector. This is the gist of the article. Now, based on this, let's have a look at the question. Consider the following statements. Government has allowed FDI in all the segments of railways. Please understand, FDI stands for foreign direct investment. In simple terms or in layman terms, a foreign company will come into India, invest in the infrastructure development in India. This is a simple definition of FDI, but technically or as per the Government of India, this is not the technical definition. But nevertheless, what is the status of FDI in the railway sector? Government of India has allowed 100% FDI in railways, but specifically in peripheral activities such as development of stations, infrastructure development in railways. But the core activities, that is running of railways, is under the tight control of Ministry of Railways. So in all the segments of railways, FDI is not allowed. First statement is wrong. Second statement, government provides cross subsidies in the railways and power sector. Yes, to a very great extent, yes, it provides cross subsidization in the electricity as well as in case of the railways. So based on this, the right option will be option B. Only second statement is true. Now, based on this particular discussion, I want to give you descriptive questions also. What are the issues ailing the Indian railway sector? 250 words. Discuss the recommendations given by Bibek Debroy committee. This particular committee was set up by Niti Aayog. A long list of very important recommendations have been given by this particular committee. You will have to give the gist of the recommendations given by this particular committee, 250 words. The next article is related to crop insurance. Some of the very important facts which have been given in this article are: 1. In case of China, 69% of the gross cropped area is covered under crop insurance. In case of USA, this increases to 89%. And in case of India, traditionally, multiple types of insurance, that is crop insurance schemes, have been implemented by Government of India. Some of them are NAIS, National Agriculture Insurance Scheme, which was restructured and implemented as MNAIS, Modified National Agriculture Insurance Scheme, Weather-Based Crop Insurance Scheme. Now, over a period of time, there have been certain issues with respect to these kind of schemes. For example, this particular article quotes a fact that between 2002 to 2012 and 13, the coverage of crop insurance just increased by 3 percentage points. That is, only around 7% of the farming households were covered under these particular crop insurance schemes by 2012 and 13. And this particular article also quotes that between 1985 to 2012 and 13, the coverage of a crop insurance scheme, the increase has been very modest or just incremental in nature. What were the issues? Issues were, one, the designing of the scheme was not done properly. Second, a large number of farmers did not know about these particular schemes. And third, even in case of the farmers who knew about these particular crop insurance schemes, they were not happy with the terms and conditions that were imposed to avail these particular crop insurance schemes. So Government of India in the recent times basically merged these kind of agriculture insurance schemes and implemented a new scheme, Pradhan Mantri Fasal Bima Yojana. But having said so, understand this. This particular scheme, though has subsumed some of the previous crop insurance schemes, even today, apart from Pradhan Mantri Fasal Bima Yojana, there is another very important crop insurance scheme, that is weather-based crop insurance scheme, which is also being implemented parallel to the Pradhan Mantri Fasal Bima Yojana. Now, the objective of Pradhan Mantri Fasal Bima Yojana was to ensure that the coverage will be expanded. And the target that was set up under the Pradhan Mantri Fasal Bima Yojana was to cover 50% of the lands by 2017 and 2018. But this particular article says that even this particular Pradhan Mantri Fasal Bima Yojana has certain issues. The farmers or the cultivators are facing certain issues. As a result of this, though the target is 50% coverage, we have been able to achieve only 29% coverage under this particular scheme. But having said so, remember this also. Earlier, before the launch of this particular scheme, only 23% of the farmlands were covered under insurance, and this has increased to 29%. But this particular 29% is much farther away from the targeted 50% coverage. Now, what are the issues plaguing the Pradhan Mantri Fasal Bima Yojana? One very important issue which has been flagged is non-availability of documents. That is, all the farmers do not have all the proper documents. And since they don't have all the required documents, it is very difficult for them to get access to the crop insurance. And second, in some of the cases, there has been a delay in providing the insurance coverage. And since there is a delay in providing this particular insurance amount, farmers are opting out of this particular insurance coverage or insurance scheme. So these are some of the points which have been mentioned in this particular article. Now, based on this, let's have a look at the question. Consider the following statements. Pradhan Mantri Fasal Bima Yojana has subsumed all the previous crop insurance schemes. No, this is wrong. I've told you this particular point already. Even though this has subsumed NAIS and MNAIS, weather-based crop insurance scheme is still being implemented. So it has not subsumed all the previous crop insurance scheme. Second statement. One of the objectives of Pradhan Mantri Fasal Bima Yojana is to ensure flow of the credit to the agriculture sector. This is true. There are multiple objectives which have been laid out by the government. One of the objectives is to ensure that there is a flow of credit to the agriculture sector. Based on this, the right option will be option B. Only second statement is true. The next article is related to Utkarsh 2022. Now, this particular Utkarsh 2022 is a medium-term framework which has been decided by RBI. So remember this, Utkarsh 2022 is a medium-term framework which has been set up or which has been proposed by RBI in order to improve the regulation as well as supervision activities of RBI. And this particular policy of Utkarsh 2022 has been proposed for a period of 3 years. Now, this is not the first time that this kind of a policy has been announced by RBI. Even back in the year 2015 also, they had announced a similar kind of a policy. But more importantly, Utkarsh 2022, that is a medium-term roadmap, will have particular objectives. Just remember these particular objectives because UPSC might ask a preliminary question on Utkarsh 2022 itself, or it might ask simply the objectives which have been laid out by RBI under this particular policy of Utkarsh 2022. This particular policy or medium-term roadmap will have 6 very important objectives. 1. Excellence in performance of a statutory and other functions. Strengthened trust of citizens and other institutions in RBI. Enhanced relevance and significance in national and global role. Transparent, accountable and ethics-driven internal governance. Best-in-class and environment-friendly digital as well as a physical infrastructure. Innovative, dynamic and skilled human resources. So the roadmap has 6 very important objectives. Remember, or at least remember the keywords in each of these particular objectives because there is a scope of this being asked in the UPSC prelims. Now beyond this, there is nothing much important given in the article. All that you need to remember is 1. This is a medium-term framework which has been put forward by RBI. Second, it is applicable for a period of 3 years, that is till 2022. And third, it has got 6 very important objectives, and this is a list of these particular 6 important objectives. Now let's have a look at a question based on this. RBI has launched a medium-term strategy of Utkarsh 2022. Yes, this is correct. RBI regulates all the lending done under the housing finance. This is a statement based on the current affairs discussion. Very recently, Finance Minister in the budget has stated that the housing finance or the regulation related to housing finance will be brought under the control or regulation of RBI. Now, what is the issue here? Issue is housing finance can be done by banks as well as NBFCs, non-banking financial companies. As of now, RBI regulates lending done by banks under the housing finance concept. Whereas in case of NBFCs lending for housing finance, it is regulated by Housing Board. So as of now, this particular statement is wrong. So RBI has launched a medium-term strategy of Utkarsh 2022. Yes, RBI regulates all the lending done under housing finance. Wrong. So based on this, the right option will be option A. Only one is true. The next article is related to SMEs and growth in India. Now, basic concept is Government of India has announced that they want to develop Indian economy into a $5 trillion economy. And to become a $5 trillion economy, one of the very important contributions to Indian economy will be done by MSME sector. Why? MSME sector generates huge number of employment opportunities in India. More than 60 million MSME units are present, which have generated more than 110 million number of employment opportunities in India. And the MSMEs will contribute to manufacturing of goods as well as services. MSMEs will contribute even to exports, and ultimately it means MSMEs are contributing heavily to gross domestic product. This is the importance of the MSME sector. And in case of India, the MSME sector is suffering from certain issues. The biggest issue is with respect to availability of credit. But more importantly, this article says that the way Government of India defines MSME is not on equal footing compared to the international practice. In case of India, we define the MSMEs based on the investment in plant and machinery. And there is one definition for MSME units in manufacturing sector, another definition for MSME units in the services sector. Whereas globally accepted practices, usually these particular SME units, that is micro and small enterprises, Usually these are defined based on number of employees in the units. And in certain cases, apart from considering the number of employees, they will also consider other parameters such as net worth of the company or turnover of these particular units. So Government of India, keeping this in mind, has already proposed to change the definition of the MSME units in India. Now beyond this, this article says that in case of other countries such as Germany, the SMEs have been very successful. And the reasons for this particular success in case of Germany are: one, there is a concept of clustering. What is the meaning of clustering? These particular MSME units or SMEs will be set up in clusters, which will promote the trade amongst themselves, which will promote these SMEs to act as auxiliary units to bigger companies, which will also promote export competitiveness of these particular SMEs. Apart from this, the third reason which has led to success of SME units in Germany is availability of credit. So as per this particular article, these are the three reasons which have made the SME units in Germany very successful. And these three are the issues in case of India. So Government of India needs to ensure that certain reforms will be implemented which will address these particular bottlenecks in the SMEs, such as the credit availability, such as promotion of more and more exports from these particular units, so on and so forth. And these particular bottlenecks should be taken care of if Government of India wants to convert Indian economy into a $5 trillion economy. So this is the gist of the article given here. The next article is related to a very simple concept of 301 or 301 probe. Now please be very careful. Next year in the UPSC prelims, he might simply throw in this particular term and ask in which context this particular term was there in the discussion. Basically, USA will conduct trade with multiple trade partners, and one of the act which has been imposed by the government of USA is Trade Act of 1974. And this particular concept of a 301 probe originates from this particular 1974 act itself. Now, whenever USA conducts the trade with its trading partners, if any of these trading partners take certain policy measure or change the policy, impose a certain tariff, or do any activity which hinders the trade between these two countries, then government of USA will have the right to launch a 301 probe. And in this particular 301 probe, these particular authorities will investigate why these particular policies have been taken by the other countries or the trading partners, and what is the impact of these particular policies on the trade between USA and this particular country. And if this authority comes to a conclusion that this particular policy or the decision is negatively affecting the trade between these two countries, then government of USA will take certain action against this particular country, such as imposing retaliatory tariffs or asking the country or the government to withdraw these particular measures. This is the concept of a 301 probe. Now, what government of USA has basically stated that it is considering to launch a 301 probe against the trade policies of government of India. Now, once it is launched, once the investigation is done, what will be the outcome of that? You will have to wait and see. But essentially, this is a concept of a 301 probe. So these are the various important articles as well as the questions associated with these particular articles for this particular time period. Thank you. Have a good day.